Okay, so today we're going to dig into a story that's been making some serious waves in the tech and crypto world. It's about a company called Cipher Mining, a pretty brutal stock crash, and, well, a $9 billion secret that it seems like Wall Street just completely missed. And that's really the core question we're trying to answer here. I mean, on the surface, Cipher Mining looked like it was in an absolute freefall. But the real story, well, it's a lot more complicated and honestly, way more interesting.
And this is what kicked off all the panic. In just the first week of February 2026, Cipher stock just plummeted. We're talking nearly 20%. To most people, it looked like, oh, here we go again, another crypto miner hitting the skids. But was that what was really happening?
To really get what's going on, first we have to look at the story everybody saw. The narrative that was actually driving that 20% drop. There were these three really clear and frankly pretty scary headlines that all hit the market at the same time. It was just a perfect storm of bad news. First, you hear the company took on a staggering amount of new debt. Then, at the same time, Bitcoin's price starts falling, which, crushes their main business. And to top it all off, they were spending money faster than ever. Let's start with that debt. So the first shockwave was this, a $2 billion debt offering. Now, in a high interest rate environment like we're in, when you see a company take on this much leverage this aggressively, it creates instant fear. The market's first thought is pretty simple, insolvency risk. And then came the second blow, this time from the crypto market itself. Bitcoin slid down to a 15-month low. For a company whose entire business model was basically mining Bitcoin, that's a direct hit right to the bottom line. It squeezed their profit margins at the worst possible time. But, and this is a big but, while the market was panicking about the debt and the price of Bitcoin, it was missing the real story. Behind the scenes, something absolutely huge was happening. A fundamental transformation that some of the big institutional analysts were already calling the Great Reset. And the Great Reset, look, this wasn't just some catchy phrase. It was a signal of a complete pivot in Cipher's entire business strategy. A move so big, it makes their old mining operation look like, well, almost a footnote. And it's all built on a foundation of massive, long-term contracts. So here's the first piece of the puzzle the market totally missed. Back in late 2025, Cipher signed a 15-year contract with Amazon Web Services, AWS, worth an estimated $5.5 billion. And here's the second piece, a 10-year deal with an AI cloud platform called FluidStack, worth another $3.8 billion. And listen, these aren't just some speculative projections. These are signed, sealed, and delivered contracts. So you add all that up, and the picture becomes crystal clear. Cipher is sitting on a contractual backlog of over $9 billion in secured future revenue. This is the secret the market just wasn't seeing. So what does all this really mean? It means Cipher is not just a Bitcoin miner anymore. It's changing into something way more stable and predictable. Think of it as a hyperscale AI landlord. This pivot just creates such a stark contrast. The old model, right, Bitcoin mining, is super volatile, has high energy costs, shrinking margins. The new model is the total opposite. It's a stable business built on fixed rent from long-term contracts with incredibly high, predictable profit margins. Now, to see the financial impact of this pivot, we got to look at a key metric, EPS. That's earnings per share. It's basically just a simple measure of how profitable a company is. And for Cipher, the EPS story is about to change dramatically. This table shows what analysts call the classic J-curve. Right now, the company is down here at the bottom of the J, losing a little money in early 2026 while it builds everything out. But just watch what happens as we move up that curve. In the second half of the year, when those big AWS and FluidStack contracts actually go live, EPS is projected to swing way into the positive. And by 2027, it's expected to top $1.16. Now, look, a great business model is one thing, but can it be defended? That brings us to Cipher's unique competitive advantage, what some people are calling its Texas moat. It's the reason this strategy is so darn hard for anyone else to copy. So this moat is built on three things. First, they've got these long-term fixed-price power deals in Texas that protect them from rising energy costs. Second, they have the ability to actually sell that power back to the grid for a profit when demand is high. And third, their existing infrastructure is already state-of-the-art and super efficient. And who believes in this strategy? The so-called smart money. I mean, the founders still hold a huge stake, but maybe more importantly, you've got financial giants like Vanguard and BlackRock, who together own over 14% of the company. And get this, they were adding to their positions even as the price was dropping. And if you need the ultimate vote of confidence, here it is. Google is financially backstopping a massive chunk of that fluid stack deal, basically acting as the ultimate guarantor. Why would they do that? Because Google has effectively tied its own AI cloud growth directly to Cipher's physical infrastructure.
All right, so let's put all the pieces together. The market saw a struggling crypto miner taking on some really scary debt. But the reality? Well, it's something else entirely.
This right here, this is the best way to think about the new Cipher Mining. It's not a crypto stock anymore. It's an AI infrastructure company that acts more like a specialized landlord, like a real estate investment trust that just so happens to be collecting rent from the biggest tech companies on the planet.
And this brings us full circle. Remember that $2 billion in debt that scared everybody? It's not a sign of weakness. It's the funding being used to build the exact data centers that Amazon and Google have already signed contracts to rent for the next decade and beyond.
Which leaves us with a final question. In this massive race to build the foundation for artificial intelligence, companies need insane amounts of power and computing infrastructure. Cipher is providing it. So the real question isn't whether Cipher is in trouble, it's whether the market's short-term fear has created a rare opportunity to invest in the picks and shovels of the new AI gold rush.